Hi, everyone, and welcome to your Daily 5. This will be for April 25th, 2023. We're in the last few days of trading for April. I'm Leslie Jouflas of Trading Live Online, and I do this segment a couple of times a month. It's always fun to do. We've got about 10 minutes to present about 5 charts. Well, today, what I'd like to look at is almost from an intraday perspective of the S&P 500 setting up for a breakout move. This particular video may be of interest for day traders in particular. So I'm going to show you a few of the things that I look at for analysis that can tell me when the market is getting ready to break out for another move, and some things that I look at for confirmation. Today, I'm actually recording this on April 24th, and I'm letting you know that because the trading intraday today ties into today's segment. So I'm also going to show you a couple of charts from April 24th that ties in to the material. So let's get going and look at some charts. So I'm starting out with a S&P 500 on a daily chart, and I've got just some simple horizontal trend lines marked in where current resistance is. Down here is where some resistance was, but it's now supposedly a support area. If those of you that follow the videos remember from the last FOMC meeting, I pointed out a level of 4073 in the S&P. And that it's this bar right here. So you see where this line coming across the resistance is. This was a day the FOMC met and they had an announcement and the market spiked up, went down, and then it's gotten through that 4073 level. I think this is a support level that the market needs to hold right now for a couple of reasons. One, generally when FOMC high points or low points are taken out, they generally cause a larger move in the direction that they're taken out. So if this fails as support, I would expect more of a retracement move down. The other reason I feel that this is important to hold as support is there's an inverse head and shoulder here. There's a left shoulder, there's the head, and there's the right shoulder, and the market's broken out from that level up to this next resistance. So this pattern has not reached an objective yet, which is going to be up around that 4,300 level. So if the market does decline, breaks the 4073, then I think that we have to relook at this pattern. But back to why I think the S&P is getting ready for a breakout move is also related to the type of candles that I'm seeing on the chart. We've got a series of doji candles, neutral, open, and closes, and the market's been opening and closing and testing around the same price level. So I'm going to scale down now to a smaller time frame and show you that in some detail. The price level that the market has been opening and closing around the last few days is around the 4154 area, 4155. We don't need to be extremely exact on that number, but just know that that's where the market's been opening and closing. So if we look at today's trading, which again is April 24th, the day I'm recording this for the April 25th segment, and then we look over here, the previous day, we can see the open, and over here we can see the close, and over here we can see the close of the first bar. And so the market is making sort of a coil around that number. So the market should be moving away from that 4150-ish, 55-ish level with a trending type of a move. This morning, this is why I wanted to show this to you today. This morning, you can see the market opened and it started to the upside and failed to hold any upside break. It then reversed and started to the downside, making it look like there might be a downside breakout that occurring, but that also turned back around up into the range. And speaking of ranges, that's another way that you can kind of determine if the market is setting up for a trending type move. And again, especially day traders can be looking at this type of information. So the previous day from Friday, you can see this is where it opened. The market just traded, down, up all day and pretty much closed very close to where it opened. And this created the range of the day, a narrow range 7 day, and that's the narrowest range in the last 7 days. So you simply take this day, the narrow range, and you count this as day one, 2, 3, and you count back 7 days to confirm that that's the narrowest range in the last seven trading days. And that's also indicative of the market coiling up, getting ready for a move. So with a narrow range day, those sometimes can be traded as breakout days, with the market the next day either having a breakout to the upside, above the high, or to the downside, below the low. So today would be a false breakout to the upside. The market traded up there, but look at how it just could not get going to the upside and then reversed. And that's the fun of doing breakout type of trades. You get, kind of false moves, but you learn how to manage those very well. And then the market reversed again back to the downside. So this low right here, this is 41.30. 41.35, I think is what I'm seeing on my screen. So that's the low. You can see how a range is being formed in here. So let's look at a couple of other things. Now I'm scaling down, still intraday, onto a 20,000 tick chart. So I've got the Globex data so I can see all these swings. So on here, what I'm seeing is that there's a B, C, D sell pattern here. And for those of you that are following, you're probably getting familiar with those. If not, if you come to my website, Trading Live Online, if you scroll down to the bottom and sign up to be on my email list, then you should receive a copy of an article that outlines in detail this particular pattern. And along with this pattern, there was another cell pattern, also an A, B, C, D, but this is a butterfly cell pattern because I'm also using this swing as an X to A, the B, and then the CD extends beyond that. So that's kind of a swing that's ending this move from low to high, and these are known as reversal patterns. Now, I've drawn in a trend line down this way, and where that range is that I just showed you, I've got that mapped out here. We can see how this trend line and this trend line are kind of intersecting together. So getting above and closing above the 4162 and a half is going to most likely confirm a breakout to the upside. And here the market made a Globex low around 41.33, so I'd be using that as a breakout to the downside. But let's look at a couple of other things as well. So now I'm looking at a 60-minute chart of the S&P 500, still another intraday chart. So I've mapped in that 41.33 support level, and you can see how it's been tested, several times back here. It came up through it here, tested, 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 and tested here. So that's also leads me to believe that a break of that, we're going to see the market move down further. This is where the FOMC high was at 4073 level. And so I've got that just marked off across here. So those are the areas I'm watching for a breakout. And again, above the 4160-ish area where that high was made today but failed is what I'm going to be using for upside breakout. Now, let me just tell you something that if you're an intraday trader and you trade the S&P, what you might want to be keeping an eye on. And that is the NASDAQ index and the Dow Jones Industrial Index also on intraday time frames, because you should be expecting, if there's a good breakout, that all of the indexes are going to be moving together in the same direction. So this morning, when the market came up and made this high, the NASDAQ was moving to the upside, the Dow was not. So I want to show you just one more thing that you can look at really simply on stock charts. And that's the market movers on your dashboard. So you can find that over here. There's a little section you can drop down and just go to the market movers. And so this is going to show you the most active, the percent up and the percent down. Well, when NASDAQ was moving up this morning and the S&P was following on that breakout, the Dow had a lot of percent down here. If it's a strong move to the upside, there's going to be very few percent down. And the same thing is true if it's a strong move to the downside, there's going to be very few or no percent up. So that's just a quick uh, way that you can help confirm a breakout using the other indexes. And also because the VIX has been getting down to some pretty low levels. If the market breaks to the downside, then we want to expect to see the VIX moving to the upside, and vice versa. If the market breaks to the upside, we want to be seeing the VIX move to the downside. So that's what I'm going to be watching for breakout levels on Tuesday and Wednesday. It looks like the market is getting fairly close to making that move. So I hope that you found this video helpful. I'll see you on the next Your Daily 5.